G'day guys, welcome to the channel. My name's Tim, and on today's episode, I believe I've got definitive proof that Bitcoin and the stock market are directly correlated. And I believe we can use this information to predict the next Bitcoin bottom. This is going to be a good one. Okay, so first of all, we're going to take a step back and have a look at the stock market. This is the Dow Jones from 1929 right up to the current day. You can see in 1929 we had the Great Depression crash. It's ABC correction. And then from 1942 right up until now, almost 80 years later, we've had an absolute super cycle with wave 1, 2, 3, 4, 5. This could be the last of the waves. But you'll notice also that every 4 years, the Dow Jones bounces. There's a regular cadence. It happens over the entire life of the Dow Jones. 1966, bounce. 1970, bounce. 1974, big crash, 40%, bounce, and so forth, and so forth, and so forth. Now you might think that 4-year cadence sounds familiar because Bitcoin also follows a 4-year cadence. The conventional belief is that every 4 years or so, the Bitcoin halving is what causes the run-ups in price every 4 years. And certainly, it seems to correlate. But we know that correlation does not necessarily mean causation. Perhaps there's something else that's causing the Bitcoin price to rise approximately every 4 years. Let's bring up the Dow Jones and Bitcoin over roughly the same period. Now, if we zoom into the Dow Jones, you can see that, again, every 4 years, it tends to bounce. So we had a bounce here in September 2011, followed by another one in August 2015, followed by another one around 2020, which was the COVID crash. We also had a mini one back here in 2018, December. Let's have a look at the dates for Bitcoin. September 2011 was a bottom for Bitcoin. It then had the 2013 peak 1 and peak 2. We then bottomed again in August 2015. We then had a run-up for the 2017 peak. We then bottomed again in December 2018. And then again for the March 2020 COVID crash. The dates line up exactly. Now, why might this be? Well, I always like to talk about Bitcoin as being one particular asset in a larger class of assets. And it's like a shopping mall. So in a shopping mall, you have lots of shops. And to me, Bitcoin is like one shop in a larger shopping mall. The Dow Jones, the Nasdaq, the S&P 500, these are all different sections of the shopping mall with lots of shops in them. If you look at the size of Bitcoin, currently it's about $700 billion in market cap. But look at some of these other shops that are also in the same shopping mall. Gold is the biggest shop at $11 trillion. Then you have the big tech companies like Apple and Microsoft and Amazon, Google. So Bitcoin doesn't just live in its own bubble. It's part of an overall ecosystem. And we look at the Dow Jones. We look at the dates, September 2011. We look, August 2015, December 2018, March 2020, 1, 2, 3, 4. We have 4 data points to the month that match up exactly. So we know that the Dow Jones bounces roughly every 4 years. Okay, so roughly every 4 years. The next time it bounces, if it follows this same pattern, which it's been following for about 100 years, the next time it bounces should be somewhere around 2024, somewhere around here. So you can see the price has already climbed up. The Dow Jones is likely to come down around 2024. And if history is anything to go by, Bitcoin is also likely to end up around here in 2024. So what happens between now and then? Nobody knows for sure, but the price could either go up in this massive bull run that some people are expecting and then come crashing down like that to 2024. The price might come down and then go back up again and then come crashing down in 2024. Either way, we know that in 2024, if history is anything to go by, the Bitcoin price is likely to be at the bottom. This is still speculation, but we have 4 data points that are pointing to this. So let's see what happens over the next couple of years. But this is a really exciting discovery, and I hope you've enjoyed this insight as much as I have. So I hope you've enjoyed this video also. This is not financial advice. It's purely entertainment. But this data, these 4 data points, are real. So until next time, I'm Tim, and cheers.